Not all wealth is made in a rising market. Sometimes, real insight lies in spotting a bubble about to burst when everyone else is caught up in greed. Some investors go the other way, betting that the world is about to fall. That's what we call short selling. Imagine silver is trading at 20 per ounce, and I believe it'll drop soon. So, I borrow 1 ounce of silver from my friend Philip and immediately sell it for 20. Now, I hold 20 in cash, but I still owe Philip 1 ounce of silver. Then I wait for the market price to fall. A few days later, the price really falls to 15 per ounce. I use 15 to buy back that ounce of silver from the market. Then I return the ounce to Philip. Debt settled, and I'm left with 5 in profit. That's the basic logic of short selling. Borrow, sell, wait, buy back, return, using the price difference to make money. So if you only ever make money when markets go up, you're missing out on half the opportunity. So how do we grab that other half and take full advantage of it? That brings us to the 3 major short selling strategies. You're no longer just betting on up or down in the market. Instead, you pick one strong stock to go long and one weak stock to short within the same market. This way, even if the whole market is volatile, as long as you judge correctly and the strong stock outperforms the weak one, you profit whether they rise or fall. Either way, you gain from the gap between the two. Feel free to pause and study the line chart and table if you want to understand this strategy more clearly. Julian Robertson was undoubtedly a legend, founder of Tiger Management, often called the father of hedge funds. In the early 1990s, while global capital chased Japanese assets and hailed Tokyo as the next Wall Street, Robertson made a bold move. He shorted Japanese stocks and went long on US growth stocks. At the time, it was like betting against the entire world. Japan's Nikkei soared to nearly 40-0. Real estate prices were higher than Manhattan. Bank valuations hit record highs. Everyone believed Japan can't fall. But Robertson saw inflated earnings, massive debt, and deep structural problems. So he acted, shorting Japanese banks and real estate, going long on US growth names like Dell, Microsoft, and Pepsi. The Japanese bubble burst. The Nikkei crashed. His US picks soared. While most investors were in shock or panic, Tiger Management posted over 40% returns. A legendary year. True masters profit not from market direction, but from seeing through the crowd's blind spots. In the world of short selling, there's a group of traders who don't rely on models or technical charts. They are whistleblowers, more like detectives or snipers in the financial world. This is the strategy known as short activism. Their weapon isn't price data, it's the truth. They dive deep into seemingly glamorous companies, uncover hidden holes behind the numbers, quietly build short positions, and then release bombshell reports. They don't wait for the storm. They bring the lightning. One of the most iconic cases, Muddy Waters shorting Luckin Coffee. Back in 2020, Luckin was at its peak. Over 500 stores in 2 years. A 12 billion market cap. Challenging Starbucks in China. Stock price, 51 a share. Everyone believed it was a miracle growth story. Muddy Waters didn't buy it. They received an anonymous 89-page report, 11 0 hours of video, 9 0 receipt, 92 full-time investigators, 3 months of research. Conclusion? Luckin had faked over RMB 2.2 billion in revenue. Muddy Waters shorted the stock. Published the report on January 31, 2020. The market exploded. The stock plunged 80% overnight. Luckin was delisted. Investors lost big. Muddy Waters made hundreds of millions. It wasn't driven by momentum. It was a pure research-driven strike, more aggressive, more direct, often dramatic. Short activism turns investing into investigation and transforms Wall Street into a truth arena. Now, the third strategy, the most explosive of all, speculative attack. Only one investor in history truly shook a nation on his own, George Soros. In 1992, he launched a macro-level short strategy, made $1 billion in just 24 hours, crushed the Bank of England. He became known as the man who broke the Bank of England. At the time, Europe was pushing for currency integration. The exchange rate mechanism was created. It pegged currencies within fixed exchange rate bands. The UK joined, but the pound was overvalued. The UK economy was weak. Inflation was high. Unemployment was soaring. The British government refused to back down. They used central bank reserves to defend the pound. They raised interest rates. They fought the market. Soros saw through it, and he acted. He deployed over $10 billion in capital, shorted the pound relentlessly for weeks, borrowed it, sold it, waited for the collapse. September 16, 1992, Black Wednesday. The Bank of England raised rates from 10% to 15%, spent £27 billion to hold the line. The market didn't care. The pound crashed 15% in a single day. The UK exited the ERM. Soros walked away with $1 billion. The UK lost £30 billion. This wasn't just a short trade. It was a surgical takedown of a nation's currency system. Soros wasn't reading earnings reports. He wasn't chasing trends. He used global insight, massive capital, and unmatched conviction. A financial war won in a single day. From long-short pair trades to corporate takedowns to breaking entire currencies, short selling reveals one timeless truth. Real wealth doesn't always come from going with the flow. It comes from seeing the truth, resisting human nature, and swimming against the tide. Julian Robertson saw structural weakness and arbitraged it. Muddy waters exposed illusion and triggered shockwaves. Soros cornered the Nationale and left it no way out. He did in one day what most investors wouldn't dare to attempt in a lifetime. Short sellers aren't evil speculators. They're the sharpest magnifying glass in finance. They force systems to face reality. Their weapon isn't blind pessimism. It's clear thinking, deep research, unshakable conviction. While most people are still cheering the rally, they've already pulled the trigger.